Hey, good morning. Let's go over today's trade plan. So, as I covered in yesterday's recap post, that the next main catalyst that can drive the market is going to be Janet Yellen's talk at 9 a.m. Central, and the expectation for the overnight session was for the market to balance within a range. We had some news out of Ukraine that resulted in a downside push, and the other idea we talked about was how this market has been going up on very light volume, and moves like this are prone to corrections. Now, we've seen earlier in the year where, the internals weren't really supporting the move, but the price action was bullish and the market continued heading higher, and then eventually there was a correction, but it doesn't have to happen right away. This theme of light volume, trudgy up move can continue, and eventually there will probably be a correction, and it can happen very quickly, but it doesn't necessarily have to happen immediately or today or even tomorrow, right? So we do have to keep that in mind, and that's why we have to keep our focus on price action, even if the internals are not quite supporting this upside push. So overall, over the last few days, our strategy has been to be a bit more defensive and play more defense on the long side. Avoid shorting unless it's on first test and it's at a very clear resistance area. But really, the focus has been on the long side, but at good trade location, with very good timing, even on the smaller time frames. And that theme pretty much continues, except now we are seeing a little bit more selling come into the market. We are at pretty elevated prices, and it's unlikely that the market is going to make a new high ahead of Janet Yellen's talk at 9 a.m. Central. So heading into the open, we have initial resistance at 88.75 to 90.75. Below that, we know that we could get a little bit more selling. On the downside, we have pre-market support 83.84. The market has already bounced over there in the overnight session, though, so that area does call for some caution. Below that, we have initial support 79 to 81. That area can still attract responsive buyers, and in the event of a stronger down move, the next primary zone where buyers can step in would be 73 to 75. So that's another spot where, if you get a bit extended into it, we can still get a buy response because overall, the market is within this uptrend, right? So any correction can still attract buyers on pullbacks into support. So, we can still consider taking fade setups on pullbacks into 79 to 81. Some caution here because it would be right below the pre-market support zone, but this is an area where buyers can still step in, especially if it's ahead of Janet Yellen's talk. And 73 to 75, still a decent spot where buyers can step in. And then in the event of a really extreme move on the downside, 65.75 to 67.75 is an area that can shut off the selling and actually end up being the end of the downside push and result in a pretty decent bounce back up into the 76 area, potentially even higher. So right now, bigger picture, we know that the uptrend is still intact. Short term, we are a bit extended here. It doesn't mean that the market can't make another high today. So it does require a pretty flexible and nimble mindset, and just being even more selective because we are heading into the weekend. We have the 9 a.m. Central talk that can result in some price fluctuation. So it's best to be a bit more conservative today. Last day of the week, heading into the weekend, people might be taking some profits, taking some risk off the table with the market being so extended up here into, the 1988 to 90 area. So, today is going to be about kind of just finding that one good trade where the market gets either overextended and you can take a fade setup, or you're able to get on board a directional push very early on. So an example of that would be, if the market starts failing and, breaking down and rejecting 88.75 to 90.75, that could be a potential short down to 79 to 81, potentially a little bit lower. If the market makes a fast move down to 73, then that could be a fade setup for a quick, 4 to 6 point bounce. So, it is going to require a lot of selectivity and just not being very active in the market. We're seeing the market's running a very light volume so far, and when the market is running on light volume, typically the ranges are not very wide, and the market has less probability of continuing a directional push, right? So when you're running on light volume, even when you get a directional push, a lot of times you won't get a lot of follow through, and the market can then start to enter into another balance phase. So that's another idea to keep in mind. And because of all of this, you come to the conclusion that it's best to be very selective in this environment, and just not be very active, and avoid the chop and the two-sided movement, and really only take the trade at the extremes, at the edges, or if you're able to get on board a directional momentum push at the beginning of the move, right? So you don't want to really enter after the market's already moved, 8 or 10 points, and then look for a continuation. But if it's only moved 3 or 4 points and there's another 5, 6 points into it, then that's another trade idea that can be considered. So today below 88.75 to 90.75, sellers can still press for a move down to 79 to 81, potentially 73 to 75, and overall expecting balance heading into 9 a.m. Central, and then after that there can be some bigger swings on the reaction to Janet Yellen's talk. So those are the main ideas. Let's see how well the buy side can hold it up this morning, and we'll take it from there.